Hello, this is Joe Pryor with the virtualrealestateteam.com in Oklahoma City. I'm here with my ever-present companion, Henri the Poodle. He likes to sit in my lap while I'm doing videos, and hopefully he'll help us out here a little bit before the end of the thing. I did a series here recently for first-time home buyers. I went through a lot of detail in about 7 videos, trying to make sure that you had the kind of information that you really needed to make an informed decision. But during that process, I found that there were quite a few things that I thought needed a little bit more explanation to help you out. So expect about at least another 3 videos in the First Time Homebuyer series. I think that'll help out quite a bit. Today we're going to talk about choosing a lender, and we're going to talk about loan programs. Now, the landscape in lending has changed a lot. Obviously, in 2005 and 6, we had a lot of little hothouse lenders that, you could just come in and say, I need a loan, and they would say, you're approved without doing anything. Now you got to document everything, and it's much tougher than it was. It's the way it probably should be at this point. What do you think, Henri? I think he wants to lay down. He likes it there. So right now we're probably going to go with a pretty good sized company that is allied with a bank. Now, large companies certainly exist that are nationwide, but with local loan originators, and I really suggest that for the first-time home buyer. A lot of these internet things are kind of their come-ons. They tell you they're going to give you this incredible rate. They really don't deliver. I mean, I've seen people say, well, I'm approved, and they have a credit score of about 200 points, what I know below, but what I know is minimum qualifying. So we want to go talk to a local person for a couple of reasons. First of all, we want someone that one-on-one, you and the loan originator, that you can go over the process and that you feel like you have an advocate that can really explain the intricacies of getting a loan, and there are intricacies, but make it simple to understand. And if you don't understand, you can always get them on the phone and ask them questions. The second thing is that if we ever have a problem, then we know we have someone that's an ally that we can talk to immediately, or go by the office and say, I'll wait, and find out what we need to know. So I really suggest for your purposes that you really need to get a relationship going with a really good originator that will explain things to you properly and do the right thing for you also. Now, we can use a huge company like a Bank of America or a Chase or a Wells Fargo here. They all have offices, they all have lending arms, they all have really good originators there. So that's one place to shop. Now, there's other places here that can give you loans that have all the programs that the biggies have got, but they're maybe not so big. One of which is Bank of Oklahoma, which is a large state-sanctioned bank. In fact, they're the largest FHA lender out there. Or some smaller companies that are also banks that I can also recommend to you, like First Mortgage. Now, they're going to kind of pull from the same mortgage pools and the same lender pools, so I'll probably tell you that pretty much the rates are the same all the way across the board. They borrow money at a particular rate. They all have to make a certain amount in order to stay in business, and those rates are competitive, but we're going to check that out for you. So we're going to find you a good person that you're comfortable with. I'm going to give you multiple sources so that you can make your choice, but I'm going to give you good people that I know have delivered good, honest service for a long time and will be your advocate. Now, also we're going to decide, and we'll do this somewhat in our first meeting, but we'll really hone this with the lender. We're going to decide what kind of a loan that you need, and it's going to be whatever's in your best interest. And there's essentially 3 different types of loans to choose from: VA, FHA, and conventional. Now, we can do adjustable rate mortgages. We can do some of the tricky things that are out there, what they call limited arms, where you have fixed rates for 5 years, and then an adjustable rate after that. I'm really going to recommend you go with a fixed rate. Now, the VA loan is Veterans Administration. That's fairly obvious that you have needed to serve your country, the United States, in military service, and for that you get an eligibility statement for qualifying for a loan. It's also the easiest qualifying loan that you can get. It has the lowest credit score requirement at about 620. It's zeroed down, which is a real advantage. There is no mortgage insurance added onto the payment because the Veterans Administration guarantees the loan. Now, there's typically a fairly sizable upfront fee that also can get larger as you start buying your second and third home. But this is something that can be financed into the mortgage, it can be paid by you, or you can ask the seller to pay it. And even though I think zero down loans have gotten a bad rap, really, veterans loans with zero down have the lowest foreclosure rate last year of any kind of loan. So thank you, veterans, for serving our country and also for making your mortgage payments on time. That is one that you can do. Now, what happens if you're not a veteran? Well, you're probably going to go with FHA. Now, FHA, which is under HUD, the Department of HUD, was something that was created back in 1934 to kind of have a little looser guidelines for you to get a mortgage. The ratios are a little better. In other words, you can get a little higher payment on what we call the front-end ratio. You can have more bills than conventional. By the way, let me back up. VA has no front-end ratio, just a back-end ratio. So you can do 41% of your income, your gross income, if you want to, if you don't have any other payments. But FHA does have a down payment, and it's 3.5% with a 640 credit score. Now, we're getting finally, I believe, some FHA loans with below 640 down to 580, but you're going to have to put a larger amount down. There talks about lenders actually now giving you loans with 10% down with a 580 credit score if your credit's not quite up to par. So 640, 3.5% down. Now, this is an insured loan. FHA insures the lender against default versus a guarantee. So there's an upfront fee, which is not a big fee. And then that is something that could be, like with VA, can be financed, you can pay it, or the seller can pay it. And then you have an annual renewal. In other words, it's divided by 12, so it's in your monthly payment for mortgage insurance. But because of the easier qualifying, that's why you pay the mortgage insurance. Now, the third type of loan is a conventional loan associated with Fannie Mae and Freddie Mac. They set the standards, very tight guidelines, much higher credit requirements, 720, 740. This is really good, however, on a couple of ways. You can usually, in the best of times, get a 5% conventional loan. It's not so easy right now. More than likely, you're going to do 10 or 20%. Now, if you do 20%, there's no mortgage insurance. But if you do 10% down, there's no upfront fee, but there's a decent amount of an annual fee that's, again, divided by 12 into your payments. Now, the good thing about 10% down conventionals, however, is that in 10% down conventionals, once you pay the mortgage down to another 10%, or what we call an 80% loan to value, you can have the mortgage insurance removed, which is not the case with FHA. It goes for the length of the mortgage forever, how long that you have it. So that can be a good thing with 10% down, or with 20% down, there is none. But again, tighter guidelines, less front-end ratio, less back-end ratio, higher credit score. More than likely, if you're a young person especially, getting into your first home, the FHA or the VA are going to be the loans that you're going to use. The type of lending that you're going to do, you're probably going to do a fixed rate, especially now at around 5%. And you're going to get with a good lender, we're going to give you resources on that. You're going to have somebody that's really going to take care of you. So this is Joe Pryor with virtualrealestateteam.com, where we deliver traditional real estate values with the speed of technology, especially to first-time homebuyers. Okay. I like that.